Hey everyone, welcome to our Shora Gains channel. Today we are going to discuss Nifty 50 Index Fund and versus Sensex 30 Index Fund. Well, ours is a new channel, so if you like the content to support us, please subscribe to our channel. Let's begin. Both Nifty 50 and Sensex 30 are frontline indices. Nifty 50 has 50 constituent shares of India's largest financially sound companies, whereas Sensex 30 is based upon shares of 30 top companies. These 50 and 30 companies respectively are selected by NSE and BSE on the basis of their well-defined criteria. Not only that, this list of 50 and 30 companies is reviewed periodically by NSE and BSE. Where required, in terms of the laid down criteria, new companies are brought in the index and some existing companies are brought out. All 30 shares figuring in Sensex 30 also figure at present in Nifty 50. This remains so most of the time despite changes in the list of constituent companies. Let's take a look at the popularity of passive investing. Nowadays, popularity of passive investing is increasing in India. Number of investors in index funds is also increasing. Out of the many indices of NSE and BSE, Nifty 50 and Sensex 30 are frontline indices constructed on the basis of top companies of India. Nifty 50 index funds as well as Sensex 30 index funds are quite popular among investors. In this video, we will discuss the comparative advantages and disadvantages of Nifty 50 and Sensex 30 index funds. Well, Nifty 50 was started in November 1995 with a value or base of 1000, whereas Sensex 30 was started in the year 1979. Present value, that is in the beginning of June 2022 of Nifty 50 is around 16,600 and that of Sensex 30 is around 55,800. This implies a CAGR of around 15.85% for Sensex 30 since its inception and a CAGR of around 11% for Nifty 50. This difference in CAGR values of the two indices is significant. Considering the fact that 30 companies are common in both indices, possible reason could be that Sensex 30 represents a more concentrated portfolio, while Nifty 50 represents a more diversified portfolio. Greater diversification implies less volatility, but then returns can also be lower. It can be said that Sensex 30 is more volatile than Nifty 50. Nonetheless, for long-term investors, Sensex 30 also offers a safe investment. In the short term, Sensex 30 can be less safe investment than Nifty 50, but in the long run, it is almost as safe as Nifty 50. Okay, so where should one invest? In view of the points mentioned here, it may be said that long-term investors may prefer investment in Sensex 30 index funds over Nifty 50 index funds. Let me add a disclaimer here in the end. This video is for information purpose only of the viewers and for providing an input for their consideration. Viewers may consult their financial advisor and also do their own analysis independently before making an investment decision. Thank you so much for watching and please do subscribe.